Hey everybody. So in today's video, what we're going to do is just kind of go over what transpired in the stock market today. There's a bunch to go over, and there are some key reversals that look like they may be taking place. So our goal is going to be to get ahead of that and not have to deal with the panic, right? If that happens. So we're going to talk about some levels here on a bunch of stocks, roughly 20 of them. At the end of this video, I'm going to just do the indexes. So there'll be timestamps, but I'm not going to do them in alphabetical order. So somebody, they can fast forward and just look at the indexes at the end if they want. But I think it's really pertinent for you to watch this all the way through, considering what we saw transpire today. CPI data
Market
came out,
data
and
loss.
Everybody was expecting that. I'm just going to put this down here, and I'm going to get rid of this text. It's right up here that it's Amazon. And what we're going to do is just start with this. Let's just start here. Okay. So you have a breakout on Amazon, and I just want to be clear about this. You have a breakout on Amazon. No matter how you slice it, you still have a breakout on Amazon. Amazon is not negated on this breakout until it breaks below this breakout bar, which is 50, 35, 39, 59. Okay. It is still in a bull flag. It is still higher than it's been in a very long time. Okay. We're overreacting because we're seeing stocks hit a high and then sell down. Well, that could just mean that they've gone too high too fast. That doesn't mean that we're going to reverse and have something like this. It also doesn't mean that we're not going to have something like that. So you're going to have to go through these and you're going to have to make decisions. And my first thing I would say is this is a 76 basis point move. I talked about this a little bit yesterday. This is a 76 basis point move on Amazon. This is not Amazon down 10%. This is Amazon down less than 1% on the day. So I think it's really important for you to understand that and then say, if this is hurting you that much, it's quite possible that your position sizes are too big, or that you're increasing your risk tolerance is too great. Something's off if this kind of move is affecting you that much. So just whether it's an option or a stock, so just keep that in mind. Now, the question becomes what to do with this. So we all see this year base. This year base did not go away because of what happened on a Tuesday, right? It just doesn't work that way. But let's just drill back into this, okay? This was our breakout. This is our single lowest close that we've had since we've gotten above this, right? So that's not great. This wick rejection is not great that we hit up here and now we've just rejected. So this is day one, what happened today. So if we do reverse, this is, again, simply day one. This can come down from here, take out this low tomorrow, right? And easily come to here. Okay, 36.21. If you're not comfortable with that, that's your first stop. Okay, it can easily get through that and come to here. Okay, 35.50. That's a 2% move on a stock. It's nothing for it to happen. You just haven't seen it happen in a while, but it's really very little for it to do that. And the reason I'm hammering this home is your plan should be, if you break this low tomorrow, whether you were in an option or a stock, and you are not willing to go to this level because you have no support in here whatsoever, and you're not willing to at least go to this level, you seriously need to consider getting out of the position. Okay, that's how I would play it. Other than that, if you're fine going to these levels, then stay in it. As far as what I'm doing with the newsletter, this is when we got in, 35.88. I'm simply moving the stop up to 35.88. We get stopped out there. We get stopped out there. It's a break-even trade. It's not why we trade, but we didn't lose money, and we'll just find another spot to enter, right? That's why it's so important when you buy something. You need to focus on your buy so that you have that leeway to kind of stay in the trade. That's why I really strongly advise people, or tell people, I don't know what the right word is. I always talk about, don't chase things. Just wait for them to come to you. And if they don't, just go on to the next one, because something will work. So but chasing today, it didn't work, right? I bought options up here. They didn't work yet. I'm in no position that I have to panic and sell them. I want to see them work. So, I'm out till end of August or third week in August. So I'm not concerned about it. I'm not happy, but it is what it is. Okay. So no one said it'd be easy. So what you have to see here is just understand that you're still in a flag and nothing's changed. Yeah, this is an awful bar. We'll deal with it and we'll go forward. Now, let's get rid of the VWAP and the volume by price and just start looking at some other details, and maybe we can get a little more color on what's going on here. So what you'll notice is where this sits is 36.40, right? So maybe you hold there as well. I personally think you'd go to this 36.21 and go through this 8-day pretty quickly because you're up above it fairly high. So that's how I would play Amazon. A low and I would be gone. If I couldn't stomach this move, right? That's how I would play it. Other than that, for the newsletter, we're probably going to use the cost, or maybe we'll use this. I'll have to take a closer look at it. I'm not so sure that I want to do that because I'm not so sure that I want to keep entering and exiting this trade. I like this trade longer term. I think it's going to be a huge winner. Coupang, CPNG, let's go through this. So spike and I'm up, spike and I'm up. I mean, it looks great. So you are moving in the right direction. I don't know what space they're in, but I like this. I would be a little concerned that you have a wick right here and you're not able to push through it, right? You should have gotten higher than where you were last time, and that just didn't transpire. So now you're sitting right there. And if we get rid of this, you can say it. So that's what I would notice. Okay. Other than that, I don't see anything wrong with it. You get through that level, you're heading here, right? Which is exactly what we're looking for. It's exactly what we want, 50. So that's what I would look for. CRCT, we're trying, we're definitely trying, but you have this downward bar and you're just building this bear flag still. And every single time you try to pump your head above it, it's getting smacked down, and you can just see wick after wick after wick. And again, for those that haven't watched it yet that are new, I'm going to link the candlestick video at the end of this one. Just watch that. I would strongly recommend, especially in this market with what happened today, that you watch this candlestick video so you understand the importance of these wicks and what's really going on out there. So, but this is clear rejection of that level. Okay, so I would continue to avoid this. So far, these first three were very easy. DLO, well, we can throw in the indicators. So you have this red bar, right? That red bar is still in charge. We have never gotten above it, which is interesting. It's only been out for a little bit of time. We haven't even been out. We've been out for June. July, yeah, we have 30 days. Okay. So you always want to have 30 data points. If you don't, go to a smaller time frame. So there's your range, 46 to 50, 53, 42. You're stuck in that range. Until you get above this, I would not go near this. So I would be waiting for it to clear this level before I got involved. That's what I would look for. Until it does that, I wouldn't go near this. Docu's one I bought in the newsletter, and I bought the breakout. The breakout failed. I came down. I'm closing below the 8-day. I'm not crazy about it that I'm closing below the 8-day. It looks to me like I could go to 277 fairly quickly, where this spot is here, right? I mean, that's right where the low of this is, and the 21-day. That doesn't make me feel warm and fuzzy. That's not really what I'm trying to do. I'm trying to stay in this, and right now I'm down in it. So my hope is that we don't hit these levels, but it very well could. It actually hung in there today, which I was, pleasantly surprised by, considering, the reversal that we saw today in the markets that we'll go over at the end of this video. But nothing's really changed. I mean, we got a 290. I do think it's got massive potential. And we said it must break 290 before executing, but it did. It not only did it break the 290, it did it on volume. Like, it did it on huge volume. So if we go back and look at it, okay, So this is the date that we're talking about. I mean, look at the volume spike. It was enormous. So, and since then we've sold back down, but we have to see what happens with it. If we get stopped out, we get stopped out. But I do like the trade. And, sometimes you just get stopped out. And you can see how it's curving. I mean, it's not really exactly what we're looking for, right? It obviously looked a lot better here when it looked like we were going to break out. And now today we have this. So let's just see what happens tomorrow and go from there and honor the process. But I don't see any reason for $3. I'm not that interested, and I got to get out at 283 to try to get back in. And then it doesn't go to 280, and then you come in, and then you're at 287. There's too many games. So I would say when you have a process and your process works, honor your process. And I'm comfortable with this. I mean, it broke out. This is a classic example. I say this line a lot because it's true. The first mouse usually gets the trap, right? This is exactly what happened, right? The first time through it, what happened? We got the trap. Okay, second time through it, we probably get the cheese. So just keep that in mind. I don't think this is over by a long shot. It might come in before it and then build up again before it goes higher, but I don't think this is remotely over. Ford's just hanging right in there. The one thing I like about Ford is you just have this beautiful, look, you can get rid of these indicators. You just have this beautiful wedge line. I mean, it's gorgeous. Look, put these indicators in. You have your 8 and your 21 crossing pointing down. You're bumping right against your 50. So something's going to have to give here. This is either going to break to the downside or it's going to break out again. I personally think it's going to break out. And this is kind of the reason why I feel this way. And I've been leaning this way on the stock. And every time someone asks me to look at Ford, I show this. Okay, this is a 21-year base. We broke out of it in December, January of this year, right? So I'm very comfortable with this. I don't see any reason to change my stance on this at all. I think it's a great company. And I think they're very well positioned for what's coming as far as EV. I think they are probably the best positioned for EV out of any of the big three. They hands down are. But in regards to these other smaller companies that are going to start trying to come and take market share, I don't even think all of them combined at this point, besides Tesla, have orders even combined that come close to what Ford has right now. So I'm not really sure why it's not getting more respect there. I think it will eventually. I think people will catch on to it. So FSLY, let's get rid of all these arrows. And we're going to get rid of all these segment lines. And we'll get rid of all these horizontal lines. And let's just see what's going on here. So see this rising channel? See what happened when you broke it? So rising channels usually end one way. Hold on 1 second. Let's put this in here. So rising channels usually end one way. Now here you undergapped it and then everybody thought it was going to break, but it didn't. It kept going. But look how this is going. Okay, this was a classic fill the gap, go, right? Even here, look at this. I mean, you couldn't do any better. Fill the gap, and then that was it. It was the end of it. It looked to me like it was going to go. Actually, when it did this, I actually bought a little bit of it. And then it just reversed down and got out of it. But the question is, what do you do now with it? I mean, to me, it's just riding the 50-day the whole way down. So if you're trying to stay with it, you'd stay with it because of the 50-day. But if you break the 50-day, you really have to consider getting out of it. And the way the 21 and the 9 are crossing, you need to seriously consider not being in this anymore. I mean, it's gone from this looks like it's really going to break out to not so much. So, and that's this kind of market. Look, I mean, you have these winners, they're huge, and then all of a sudden they start breaking down again. This is breaking down. And being below the 200 means that the majority of the pressure, the bears are in charge, right? When you're below this is the last stand of the bulls. And when you're below the 200-day, it's very clear who's in charge of that position. McDonald's, This one's kind of interesting. So we broke this one line. Let's get rid of these indicators. We broke this one line a while ago, and then we just left it there. We'll get rid of it. But you tried to get through, right? First time didn't work. Second time, maybe it'll work. You have a little wick there, but you have a little wick on everything today. I mean, it's just the way it was, just the way it traded. You have no real volume, but you have this huge base that's been going on for close to a year. And I really like these bases. I really think that those types of moves are gonna break out. So let's just keep going with them. But I like that. I don't see any rush, frankly. I mean, I wouldn't be in a rush until I got to 238.18, and then you could take a look at it. But other than that, I don't see the reason to be the rush. But I see what you're seeing. I get it. I mean, I see why you'd want to be in this, but you just have to wait for it to break. NIO, look, so these in, okay. So NIO, I mean, you have a lot of issues here. So I'll point out the H in a moment, but here's your 8 coming straight down after like that. You see that turn? I don't try to do too much advanced stuff, but when you turn like this and it's that strong down, right? Like that arch, you need to pay attention to that. You have a problem here, right? This is telling you that you have a problem. Okay. I know it's not the most technical thing to understand if you're not familiar with, what these averages are. You have to understand that these averages are a combination of the actual data that's on the chart, right? So this is actually, and I use simple moving averages, but this is a simple moving average of what is going on. So it is a snapshot of what has been going on for the past 8 days. And when you run up and then reverse, these other averages can change just as fast. If not, they won't change faster because they're longer, but it's telling you, it becomes telling that this 21 is a real issue now. So what you're seeing is, see how this is rolling? See that? Right? Let's get rid of these. So you can see that line. So not only am I not able to break above this trend line anymore, okay, I can't stay above the 21 anymore. So, and now I'm between the 21 and the 200. I would not want to be in this name. To me, this is really setting up for something, again, I'll use the word nasty, but this is really setting up for something, nasty. I mean, there's no really other way to say it. Breaking this trend line, this rising channel, we just talked about this. This is how they end. We just don't know when they're going to end like this. But when they end like this is what you see. See this H? Okay, this H that you're forming here, right? I mean, if I ran a short fund, I'd be all over this right now. There's so many signals. So, but this is telling you that you're going to 42.73. I see no reason that this is not going to 42.73 just to start. A matter of fact, I'll go out on a limb and say I would be shocked if it doesn't test the 200-day moving average. Shocked. So, and then you have the 50 right behind it. But this 8 and the magnitude of this move, how it's arching, is very, very telling. And it's telling you that you have a real issue here. So that's why I wanted to cover this one. I don't think I can be any clearer that if I was in that, I would not want to be in that anymore. So I always want to point this out. I found this really interesting today that they pre-released earnings. Looks like they were supposed to come out on July 29th, and they came out today. So the most interesting thing about the earnings call was their operational margins are going from 7 to 10%. Well, 3% gain on a 7% is huge, right? So they're looking at margin expansion of almost 50%. Like that's a lot, especially for a company of this size. So I really like what I heard today when I read that report. Now I trade on technicals, so I just want to walk through this. Do I think that you could get another day like this? Sure, but what I really am interested in, let me just throw this volume by price in, and I'm going to throw in, That's enough. So what I'm really interested in is charts and how I can make that's because that's where I make my money. So 569 is really what I'm watching. You could legitimately, because you have an overgap, you overgap so much today, right? That you could legitimately just say, I wouldn't even wait for 569, right? You could just argue that you should be using 578 as your stop. If you're not in this yet, I wouldn't chase it. Because of that wick, I would just say when it gets to $6, consider it then, get back in it. But that's pretty much it. Other than that, I don't see a need to do anything. I really don't. But I like this. Just a disclosure, I have a position in it. I'm very happy with it. I'm very surprised at how it hung in there today and didn't even test the lows. So overstock, this is what we're seeing happen with a lot of these names. You see how you're getting these wicks and then they build and then they go higher, then they come down. But we're getting tighter and tighter here, and you're above these key levels. So I'm not so sure this move's over, right? I'm really not sure that it's over. Now, what would negate this move? And this is look, some of these trades today that you may put on, okay, not every trade's going to have the same probability of working, okay? And understand that statement. So you need to assign a probability to how many of your trades are working and how many are not working, right? So, and for those that are new to these videos, I try to educate as we're going along so that you can kind of think this way, right? So if you did 10 trades this week and 8 of them are not working, stop doing that, right? That's not working. Okay. No matter who you're getting the advice from, if it's from yourself or your buddy, whomever, stop doing that, right? You need to be at an area where you're trying to hit at least, half the time I'm right. If not, flip a coin. Because if you don't have any edge in what you're doing, it's not going to work. So when I say probability or low probability, it doesn't mean that the return and risk and reward aren't there. They are. But like something like this, I have a huge wick here, right? Like this is enormous, all this price rejection, right? And we're going to get into the indexes today, and we're going to talk about this. And we're going to talk about the 10-year, I think. I'm going to try to make some time for it. But here, you see you're at this 94.36. All I would say if I was interested in this, I would go and see if I get above that close tomorrow. If I got above that close, I'd become very interested in this and simply use the low of the day as the stop. That gives me a 2-point range on this stock. And if I come back and retest the high that we just broke out, that gets me to 102. Okay, so that gets me, just that move alone, right, gets me 5 points to 2 points. I'm at 2.5 to 1 just on the day, right? Now, if you think that way and that you're trying to shoot for this area, because this is your first area, but I think you can get into the one, you're going to go a little higher. I don't think you're going to stop there. I think you're going to wind up heading here. I do think this takes out a new high. Just see how it's trading. It's just my thought on it. I do think it takes out this high. But if you're trying to trade to figure out how to get in it and stay in it, you just have to watch that. So coming down here, this 8, this 21, okay, maybe you can wait for that. Sure. All I'm saying is you have a $2 setup right here. Get above that, then use this as your stop. It's a simple trade. It should not take out the previous day's low, right? For several reasons. Anyone that knows how to read candlesticks can see what this is, right? So it's an evening starter to an extent. I mean, this should be fuller, but this is an evening star to an extent. And what's fascinating about it is, just like you can buy failed H patterns that don't break down, there's people that do that. You can buy failed evening stars that don't break down, right? Look at this one. Rallied up, full day. Everybody thought it was over. Everybody went home, right? All sad. I'm going to hold tomorrow. Maybe this time it'll go up. And then it does. And then they don't sell because they think they're okay. And then they get this. So, but what do you do now? Right? What are you dealing with? Well, I'm dealing with something stronger now, right? So I like this trade a lot, and I would really watch this one. I would really watch Overstock. So Snap showed its hand last week when it rejected this level. And this is what I've always tried to point out. I have way too many lines on here. Let's just start over on all these segment lines. So when you break through this, you should go. If you don't go, it's a sign, right? Just like on Docu was a sign. The thing with Docu was, frankly, a 7-point move on a $300 stock is not going to be enough that's going to get me to shake out of it. It's just not. It depends on your position size and everything else, but for me, it's not a deal breaker. But so if you're looking at this and you're here, and then you're going to go to here, right? That bar's in charge. Like this awesome green bar is in charge. This nasty red bar is in charge, right? The longer, right, they are, the more in charge they are, right? I mean, that's just how you have to think about it. Okay. Just like how you had this one here. I mean, this bar was clearly telling you that we're ready to run. And then you get something like this, right? And then you see it fail up top, and that's okay. You can even see the evening star pattern there. But what you need to do is focus on this and say, what are we going to do now? Well, what does that look like? Looks like an H to me. So we ran up, we broke down, ran up, tried to fill, couldn't fill, coming back down. What does that mean? It means you're coming to this level. Right, you're going to go to 61.96. So just consider that. It's not something that I would be rushing into. I think you're heading to that. And that makes sense too. I mean, you're right near your point of control on your volume by price and right near the 50-day. So I would not be in a huge hurry here. So Snow rejected like every other stock, right? Tried to rally up, didn't. And this is pretty much the pattern of the day, right? We thought we were going to run. They ran them up. Then everybody started looking at the bond market and the bond yields and how horrible the auction went. And they felt that they probably may have to raise rates sooner to entice people to buy bonds, the whole spiral of inflation. But, if anyone saw that CPI data today and thought that the bond market was going to have a good day, I don't get it. I don't really understand how you would think that people would be rushing to buy bonds after that. But it is what it is. But let's look at what's really going on in the internals here during the day. Okay. So, and let's just use a 15-minute because it'll be a little cleaner. So let's just go here. So you start off, you break out perfectly. You get back to the level that you were at. They take you up and then they just cut it and they take you right back down on it. Remember these daily levels. See how that's resistance? And it gets back up here. It's resistance. So these levels, it's very important that when you're trading that you leave these levels in because they tell you everything that you need to know. And this one told you everything that you need to know. It's actually a little higher. It should be right there. So it told you everything you needed to know about that level. And that rejection, when that happened, look. Okay. When that happened, right? Looks like it's really going to go this time. You have this rising flag from the middle, which is, they're bullish, but they're not the best. There's actual flag patterns, but that's not really the best looking one. And when you see these, what rising channel, what can happen to them? They can pop out, get that little frozen rope, boom, tries to get back over it. Can't, that's it, boom, toast. And then it just goes back to where it was. So, I don't think that anything is broken there, but it's not something I'd be rushing into just yet. I'd give this a little more time to develop. I'd give this more time. I think this could be a big winner, but that's just not the day that you want to see. And if I was long this and I came in and I break down, I would be gone. I'd be out. So Tremor, I wanted to go over this because it's a newer one. And what we're going to have to do with it, we're going to start on a 15-minute because we need at least 30 data points. So let's see. It looks like we can actually go to a 30-day or a 30. Yeah, let's do a 30-minute on it because that at least gives me enough data points. I could actually probably do an hour, can't I? Right? Yep. Perfect. Okay. So here's your opening bar. That's your opening price. Okay. There's your other bar, the low. You undercut it, you get everybody out, then they jam it back up, and then it goes, right? And ever since then, what did it do? Just go up. It tests this 19 level again, and then what's it do? It rips from there, right off of that gap open, and it's gone. This is really kind of hard to chase now. Okay. This is really very hard to chase. You could actually say you have a trend line here and you're above it. So this might flip and it might keep going. But for me, it's very hard to chase. I'd be looking for it if it got back to this 19 level. Now we understand the internals a little bit better. You're really, you're playing with fire up here. You could say that this is your major support, but with this hammer up here, right? I mean, it's a dragonfly pattern. They usually go higher because this is wick, right? This is all wick. So what's wick? Wick is price rejection, meaning nobody was there to sell today. It's not the worst place to be, right? It's not the worst spot to be in. But I'd be careful chasing it. If you really wanted to chase it, just take out the high, go from there, and make sure it happens on substantial volume. Because if it doesn't happen on substantial volume in this market, chances are it's going to fail with what we've seen today. So just keep that in mind. 2196 would be my stop. So Tesla, this is not what you want to see at all. And I want to just address this. This is like the exact opposite of what you want. You have the world's largest investment bank and most prestigious investment bank coming out and saying that your stock's worth $900 and it goes down. Okay, that's not the move that you want to see. So this 700 level, this might be in. Getting above that level and unable to get above, and I think it's really important to understand, this white line is volume price VWAP, right? So, and look where it is. And look how it's respecting it, right? Resistance. Opens right there, resistance. I mean, that's pretty clear factor that this is an issue. And now I'm closing, after breaking out of it, I'm closing below point of control again. And I'm closing at the low of the day, and I'm on the 8-day. So if I break into this, right, that's going to be a real issue. So you're going to have to watch this one tomorrow, but this could be a real problem. This could be a real issue. Now, if you don't take out that low, you could start to build, but this red bar is going to take a little bit of time, just like this one did, right? Because you're only beginning this. So you have a little time here before you have to concern yourself. TTD, let's get rid of this. So TTD trade desk. So this is one I have from the newsletter, and we've been in since 78, and we were fortunate enough to get a little pop up on the one day to 81.89, and we just haven't had follow through. But I just want to kind of point this out because this is exactly what's happening. And it's happening now, one, because it's summertime. Two, it's just you're at the highs, and I am going to go through these indexes at the end of this video. But look at this. Okay, you popped out. Did it fall apart? No. It's just basing. So they're spiking them up, and then they're coming back to the mean. Did this change? Is this still in a bull flag? Well, here's my flagpole. Here's my flag. Anything change? Nothing, right? But every time it goes to 78, someone's like, this is it. We're really going to go. And then guess what happens? It doesn't really go. And you're still respecting this level right here, right? You're still respecting that. Oops. Let me draw that a little bit better. Put that right there. So, I think that you're in good shape here. I think that, look, I'm very comfortable in believing that this stock is getting back to this 97 level. It just doesn't mean that it's going to happen like it did in 2000 and go up in like 3 days and get there. And so people just have to understand their expectations and start learning that the game has changed. No year has ever, some years look similar to one another, but over, as I say too often, as people tell me I say too often, in the over 20 years of doing this, and it's been over that, like no years ever look the same. There's always something wonky about it that's different, right? Like last year we had SPACs. Everybody thought SPACs were, the greatest thing. Today they're wallpaper. So, you just kind of think about it that way. You have to really look at them and go, what's different, but what's the same? The same is pattern recognition. If you understand pattern recognition and what's going on, and you understand human behavior and why that's pattern recognition, you understand why we're using candlesticks, right? I mean, these were created a long time ago before open, high, low, close charts, and they determine and they can actually tell you what human behavior is. So it's why I use them more than point figures. But anyway, and this X's and the O's, whatever people used to use. But look, I see nothing wrong here. Do I wish I was above this point of control? Absolutely. I wish I was above 78.11. Every time we try to get above it, we can't. But as I say, if you keep knocking on a door long enough, eventually it opens. So I'm very comfortable with this. I think it's still a decent trade. If I close below the 74 level, I'll be concerned. Am I happy that I closed below the 8-day? No, not remotely happy. Okay. I did it here. And then the next day I took out a high. So, but as it goes flat, it doesn't mean as much to me. But let's see what happens with it. I mean, if it takes out the stop, then we get stopped out and we go on to the next trade. Like, don't commit yourself to the trade as far as your ego. Leave it at the door. UPWK. See this flag? Okay. Broke out of the flag and turned. This was one, and look at this volume. Volume's huge, right? I get why people would be in this, and I understand why people would sell it today because you're up here on the move from a trade standpoint. But look at this trade. Okay. This was very clear, and this is why it's so important you understand patterns. Look at that bar. Okay. Clearly tells you this is what? Price rejection. So if that's telling you on the 15-minute that that's price rejection, and then I go up and I can't go up any higher, and then the next bar is telling me this is price rejection, but I have price rejection here. Next bar opens here. This is done. This is telling you it's done. Your confirmation that it's done was here. See this low, right? And they tick it right here. You're done. That little tick alone told me you were done. For those that are watching this that are part of the community, I mean, that's exactly why I called it out today and said, this is done. Like, it's probably got a short-term top end. It doesn't mean that the trade's over. It just means for right now, if you're looking at a day or two and you're not willing to hang in there, it's done. But this could easily go back to 55, and it could easily stay at 59, or it could retest the high tomorrow. I see no reason to do anything with it or change your position based upon a couple days. I've been stressing this, and maybe I'm not stressing it enough for people. You're not in a runaway breakout market. You're in a trading market that's forming channels and just grinding higher. And I think people are maybe a little bit frustrated with that. So, and that's cool. I mean, you're just not used to it, especially if you've only been trading for like a year. And like you saw last year, I mean, they made it look like a video game. So it's definitely not a video game. As I always say to people, and you're playing against the smartest, most disciplined people in the world. So you need to act like it and come in prepared for it, right? So anyway, here you are, right? Viacom. I just want to do this really quickly. If you break below this, eventually it's going to go. Somebody must be interested in buying it at some price at some point. It just doesn't seem like it's now. So, I just wanted to throw that in there real quick. I was asked about Wells Fargo, and I just want to go through this. The red bar is in charge, right? Remember when I say you have these long bars? Look, there's Wells Fargo. Look at the breakdown. Look at how we tried to rally. Couldn't get above that trend. Couldn't stay above the red bar for more than one day, right? So if you go back and look through 100 charts, you'll notice this red bar all the time. Can't get above it, tries to get it back above it, rejection, comes down, forms a morning star just like this one, right? Completes the morning star pattern and is basing. What do you do with this is the question. I'm below point of control. The 50 days pointing down, the 21's pointing down, the 8's pointing down. What do you do with this? Okay, you get out of the way. Also, if on a fundamental basis, the mere fact that they came out and pulled all the personal lines of credit for their customers, how many people are going to leave that bank and pull their deposits and go to someone that's going to give them a line of credit that they've been using for their business, right? How many people are going to pull their receivables? Like if you just think about that alone, and if they're closing their personal lines of credit, are they doing it because there's the huge losses that they're going to have to disclose next quarter? right? So, what's out there? And you have earnings, what? In 2 days? So I'd be very cautious if I own this. If I own this, it was not up substantially before earnings, I would be out. So Wing. So Wing is just moving right along, and it's very interesting. It's almost like someone needs to tell them that the market's pulling back and trading. Just basing, breaking out, basing, breaking out. You came down like the rest of the world, and you're just back into your base. I don't see a sense of doing anything. You have this gap that you really have to fill up to here. I don't see any reason why you're not filling this gap. Zero. I mean, this looks perfect. Look on Wing. Look how there's no supply over here of stock, even though it's already been up here, right? So I see no reason. Even this massive trend line, right? We've worked this off so much. How far back's that trend line go? It must go back pretty far. Yeah. So, I mean, it goes back to March. So, but look how far that trend line goes back. And look, now I don't even need that trend line to get up to here or to take out the new high. So that's kind of interesting. So I like this. I'd like to see more volume, but you don't have any. And just why we're here. So you can see where you're at. So that's it for stocks. I'm going to run through these really quickly just so people can understand where you're at and what's going on. We're just going to start with the SPY. I'm going to remove these texts. You're looking at the S&P, and we're going to get rid of some stuff here. We're going to expand this out. We're going to get rid of volume by price, and let's just drill into this. And all we're going to do is focus on this, okay? So let's get rid of this line. Okay. So the biggest issue here, more than anything, is what is going to happen tomorrow and the next day, right? There's no doubt that when you go back and look at something like this, hold on one second. Okay. There's no doubt when you look at something like this on a weekly chart that the trend is up, and today is not going to change that. What can change, right, is that you don't get to this right away. And maybe you don't. Maybe you stop now. I don't know that one day makes that happen. Then we have this minor one here that we're going to look at. We're going to talk about. Okay. I'm above this major trend, but I could go below it. And that's not a big deal, but I can go below it. Now, everybody's kind of freaking out about this one bar. Okay. Am I thrilled about that bar? No. Price rejection all the way up, opened, closed below the low. Did I even make a lower low? No. So I haven't even made a lower low, and everyone's all concerned and acting like this is going to end. Nothing's changed, right? I just had a day where we didn't go up. And just to kind of put it in perspective, the market was down 14 basis points. So, I get it's sensationalism. Everyone puts it on their Twitter account. Everyone gets all excited, and but there's nothing changing here. There's nothing at all that's changing. And look at this. And here, I mean, just look at this. And everybody thinks today's the day it's over. Like, it's not going to work that way. It doesn't work that way, right? This takes time. It breaks down. It tries to go back up again. Stop trying to time everything perfectly. It's never going to work. Believe me, it does not work. We've all tried it. We've all been there and tried that. It does not work. So the question is, what do you do with this? Look, this is simple. If you take out this low tomorrow, which you very well could, you could easily shake us out and go test the 8-day again, right? Or the 21. I don't think it happens in one day, but if you test this tomorrow, okay, that is your low of 435.31. If you break that low tomorrow, understand that you could go to this 8-day moving average. That's your first level of defense, okay? And that's going to put you at 433, which is a 30 basis to 40 basis point move. Okay, that's going to affect your stocks by 1 to 2% if they're part of this index. Then depending upon the beta, it could affect them greater or less, right? So there's nothing to do here. Absolutely nothing to do with the S&P. The Qs, I'm saving the best for last, which is the IWM. So the Qs, Yeah, I'm not crazy about this pattern, and somebody called it out today in the in the community, and they're like, "Oh, we have a gravestone." I mean, technically you don't because you have a little wedge there, but you really have a gravestone. So, am I crazy about it? No. Is it green? Yeah, I'll take it. Technically, a gravestone is where it opens and closes at the exact low, right? And it's actually a white bar, but the pattern is the pattern, so I get it, but. Am I crazy? Am I thrilled that we rejected everything that we gained today? No. So, I think it was a reason to sell because you're getting close to up to this level and people are starting to panic. That's what I think. That's my opinion. And they're looking for a reason to sell. And look, that's a reason getting up here, right? I mean, if you go here and just look at this and throw in the Bollinger Bands, right? You're riding that Bollinger Band line up. That's not going to just stop. Okay, that's why I always say when I did that Bollinger Band video, the Trading Like the Pro series, I'll link that in this one as well. You can ride these upper bands up. Like you want to look at these upper bands because there's a trade, and I have to do an advanced Bollinger Band lesson, but there's a trade where you just constantly ride them up. Like you don't even think about getting out of them. And there's a process to that, but for another time. So I don't see anything massively broken here. Now, I do want to just point this out because I've been saying this. This is the XLK, okay? So on the XLK, see how you're hitting right at that level? I mean, you're hitting the upper end of this channel, right? I feel like I'm having a problem today with these indexes staying right where I want them. Let's get rid of this. Maybe that'll make me, yeah, there we go. I like that better. See how you're hitting that line and then you rejected? How do we know we rejected it? I'm glad you asked. There's a wick, right? So it's telling us what happened. Now what we have to do is figure out what we're going to do about it. Well, to me, it's very simple, right? The XLK is 20% of, no, I'm sorry, two names are 40%. I apologize. I need more coffee. So this is what happened today, okay? We're in this in the newsletter from, I think 133. Yep, 133 with a 140 stop. So what I'm probably going to do with it is really just look at it and try to understand it and try to see if there's something that I need to do. Is there something that I need to do? Do I need to change that or can I leave that as my stop? I would argue that I probably should leave that as my stop. Well, maybe I should make it the 8-day. Well, the 8-day might be too tight, right? But if I take out a lower low, that's more of a concern. So maybe that's what I need to watch. So, you're going to have to watch this tomorrow. But if you take out the low of this on Apple, right, then you have to realize that the XLK is probably going to come in. And then if the XLK comes in, see how it's all connected? Then Microsoft's probably going to come in too. And this is another one we're in from the newsletter at 265. It's 281. And, we had to see if we're going to break through this. We're breaking through this. So there's positions like this that are out there that are holding their ground, right? And they're not going anywhere. They're just holding their ground. And I get it. I understand that we're seeing sell-offs, right? We've seen that a lot today. But let's just look at this. Just understand where you are level-wise. So this completely broke down today and pretty clearly broke down. We had to make a decision. We made it. And that was it. We actually did a trade on this and we did okay with it for a couple of days. And then that was the end of it. And it went exactly to the levels that we've been talking about today. And you're sitting right there. Now, when you're in a channel, I usually don't care about these moving averages, but what's starting to happen is these are getting a pattern to them, okay? And that pattern is down. So you need to pay attention to that. Just like here, there was a pattern, right? But now they're all together. See how this pattern, there was a pattern here and then this 8 changed that pattern and we went higher, right? Now look at the 8. This is telling you that small caps are coming in. And if I was in small caps like the FUBUs, the JMIAs of the world, I would have really tight stops on this stuff. I know that people are saying, how much lower can the NIOs of the world go and those kinds of stocks? They can go a lot lower. and maybe it's just how long I've been trading, but when people today are talking about, oh my God, this is a bloodbath, this is not a bloodbath. A bloodbath is this going back, right? And go back and look at a weekly, and this going back to 2. That's a bloodbath. This is not a bloodbath. Could this JMI do that? Absolutely. Look at that. It looks awful. So this possibility is out there. You see this with the AMC trades. Like, these trades are out there. They're ready to blow up. I mean, they're like, this is toast, right? This is just a matter of time before these go down. So, and that's a whole other meme. I could do a whole other video on that. But just to get back to this IWM and talk about these indexes, when you see this going on and you see this happening, you need to be really aware of it. Now, what other pattern do we see that's in this, right? Here's an H. See that H? Okay, so that tells you what? Tells you at a minimum, before you can even test, you're going to 217, which is right near that 218 level we've constantly been talking about. So there's at least another 1% here. So to put it in perspective, I think that the majority of risk to the downside is in smaller cap names, which is why our focus and my focus, and I believe your focus, should be in very large names and staying away from the SPACs and the memes and those kinds of things right now, because I just think that they're going to be nothing but pain. So I think there's a ton of opportunity out there if this market gets hit, this week, if it comes in, especially in tech, large cap tech. But I would really watch this stuff. So that's it. As always, if you find this helpful, please click and share it and like it, because I'm trying to get in front of as many people as humanly possible to show them what it takes being successful at trading. Thank you very much. Have a great evening.